Thank you very much. I would like first, like my colleague, thank IEMed for the invitation. It's a pleasure and honor to be here. So, to be here to share with you some thoughts and some facts from Morocco. I would like to structure my presentation in 4 points. I will start with 3 general remarks. Then I will go to the case of the Central Bank of Morocco and the case of Morocco, and speak about the general context in which we are operating, how we are dealing with the crisis and the transition, and how we are looking at the the era post-crisis. So, my general remarks, I would like to make 3 first points. First is that with the crisis, the central banks were requested to intervene. With the buffers that were limited for other authorities, the central banks were the main public authorities to intervene in the financial and economic crisis. And they did. They were on the front of the battle, and somehow we can say that they succeeded in alleviating the vulnerabilities and maybe avoiding the worst. And the consequence of this is that central banks are getting out of this era strengthened and with enlarged missions. We hear it many times about financial stability, which is a new mission for many central banks. However, it's important to remind that monetary policy alone cannot solve the problem. We need other policies. We were working about mixed policies. We need structural reforms. This is first. Second, we are entering into a new phase where deflation becomes a problem. And we have to acknowledge that central banks know much better how to deal with inflation than how to deal with deflation. The example of the Bank of Japan gives an example in this way. And third, we are heading for normalization of monetary policy. There are a lot of uncertainties still ahead. We don't know what will be the consequences of this normalization process. So this is very important to, as introductory points, to lower expectations from what we can be waiting from or expecting from central banks in general. Now, let me go back to the case of Morocco and the case of the Central Bank of Morocco. And first, I would like to remind the regulatory framework in which we are operating. So, the Central Bank of Morocco operates under the statutes of 2006, which sets the inflation stability as the main mission and provides a high degree of independence in the formulation and the implementation of monetary policy. We have a board which members are mainly independent, and some of them are coming from the private sector. With us we have Mr. Ben Amour, who is one of the members of our board. And of course the corollary of all this is that transparency. We have to be transparent, and this is what the Central Bank of Morocco is doing. Now, how the bank is working is formulating and implementing its monetary policy. In fact, the regime we have in Morocco is what can be qualified as an implicit inflation targeting. It's not an explicit inflation targeting, but in fact, it's an implicit inflation targeting, and we can see this through the way we work. We have an analytical framework which is based on monetary and real pillars of the economy, national and international. And the final objective is to make an assessment of inflationary pressures. And based on this, we take policy decisions. We don't announce it, but we are targeting an inflation rate which should be around maybe 2-3%. So when we are there, we say that we have the level is in line with our objective of price stability. Now, the central bank is doing this job in in a context and economic, and this is very important, the Moroccan economy is can be qualified as an open or in the process of openness. Since early 80s, Moroccan authorities started an openness of the economy. We have signed many free trade agreements. We have an advanced status with the European Union, and many other agreements are underway. This is on one side. On the other side, we have a capital account which free for non-residents. There are restrictions for residents, but for non-residents it's free. And we have a pegged exchange rate regime. Our currency is pegged to the basket, which is composed 80% of the euro and 20% of the dollar. Of course, this may seem impossible. You cannot have a pegged exchange rate regime and a free capital account for non-residents. But from where do we get our autonomy, some buffers if you want, is that the capital account is free for non-residents. But there is a kind of imperfect substitution between domestic capital market and the international capital market. Maybe one of the reasons is that the domestic capital market is not enough deep for international investors. So we have a margin to do something with, to target in inflation. And globally, the result of all this is not. In terms of price stability is good. If we take over the last 10, 15 years, the inflation rate in Morocco is around 1.7. We do not have any inflation problem in Morocco. So now let me go back to the uncertainty. How do we deal with the crisis? Because Morocco, there is no financial integration, but there is an economic integration. So the consequence of this is that our financial system, our banking system was resilient or was preserved from the crisis, but not our economy. Our economy is linked to the international global economy, especially to the Eurozone, through four main channels: the exports, tourism, remittances, and foreign direct investments. So if we look at the time horizon since 2000, we have two main phases. From 2000 to 2007, we had a period of excess liquidity. But since the crisis, since 2008, there is a shortage in liquidity, which is explained mainly by the fall in international reserves. And this is how our banking system was affected by the crisis. So how the central bank is dealing with this situation? First, we increased significantly the weekly liquidity injections in the banking system. We more than doubled for example, in 2012, 2013, we doubled the volume of injections. This is first. Second, we lowered at many times the required reserve ratio. The reserve ratio went from 15% in 2008 to 2% now. Third, we lowered the policy interest rate, the key rate, from 3.25 in 2009 to 2.75 currently. Of course, the lowering of policy interest rate, we were under pressure to lower this policy rate, but there was a lot of uncertainty in Morocco, because with the crisis what happened is that the twin deficits deteriorated significantly, and the government was announcing that there will be a reform of the subsidy system, and no one knows when exactly that reform would be put in place. So we didn't want to lower the key rate rapidly, because we were expecting the government to move on the subsidy reform, and the consequence of this is, of course, the high levels of prices. And this is what happened in September 13. But fortunately, there was a combination of many factors that the final result was no important increase in inflation. But more importantly, what we did during this period, and what we were hearing from the last session, is a special focus on SMEs. very small and medium enterprises. Why? Because this is the most vulnerable segment of the economy, especially in the time of crisis. So the bank pays a lot of attention to this segment of enterprises. So in 2000, I can give just some examples of mechanisms put in place to give incentives to banks to ease access to credit for this category of enterprises. So in 2012, we extended the eligible collateral for central bank funding to securities that are credit to SMEs. You don't need to have treasury bonds as a collateral. You can provide as a collateral credit securities that represent credit to the SMEs. In December 2013, we put in place a mechanism that is similar to one put in place by the Central Bank of England, which is funding for lending. We start providing liquidity for 1 year to banks, and in counterpart, they pledge to give money to SMEs, especially SMEs in the industrial sector or SMEs that are oriented to export their production. So these are some examples. And the result of this, of course, as I said, you cannot change the economy only with monetary policies. So despite these measures, the bank credit is still evolving under its long-term pace. But the focus on SMEs, with the focus on SMEs, the share of credit given to SMEs in the total credit is 35%, which is very high compared to the levels we have in the region. And to help SMEs more, the central bank also is putting in place an observatory to collect data on SMEs, on their problems, especially problems linked to financing. The central bank also organized 4 regional outreach campaigns. We went in all the regions of Morocco to meet small SMEs, to ask them what are their problems, to explain what we are doing for them, because sometimes it's also the asymmetry of information. Small enterprises in the far regions of Morocco are not aware simply of what is offered as possibilities for funding. And also the central bank has a program, and we put in place now a year ago a foundation for financial inclusion, to improve financial inclusion, because this is also important to ease access to financing. So as I said, the credit is still running under its long-term objective, and simply when you ask banks, the demand is not there. We are significantly impacted by what is going on in the Eurozone, and we are running at something like the credit is running at plus 4-5%. But sure, without these measures, we would be at maybe negative areas, like it is the case in the Eurozone. So this is the situation, how we are dealing with the transition. Now, what we are planning for after, looking forward to the future, we are working to make our implicit inflation targeting explicit. We are working to move to monetary regime which is an inflation targeting, and one point that is very important that was raised by Mr. Governor is that we are improving our capacity, analytical capacity, our technical capacity in terms of modeling, in terms of forecasting. We are also working with the government on moving towards more flexibility in the exchange rate regime. Of course, there are many requirements for this, many prerequisites before moving. We were a little bit not very far some years ago, but with the crisis now we have more things to do before arriving there. But it is an important objective in Morocco, because with this openness policy, with the Casablanca Finance City as a regional hub in Morocco, it's more appropriate to have a more flexible exchange rate regime. So we are working to move in that direction. And of course, as many central banks, we are changing our statutes, and we will have new missions, and one of these new missions is the financial stability. But inside the central bank, we are already working on that. We have a committee which works on this financial stability, and we released our first financial stability report last July. So this is globally, very quickly, to be in time, the situation, how we are dealing with the crisis, and how we are looking forward to the future. Thank you very much.